Good morning. It's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of January the 18th. But actually, it's Tuesday because yesterday we had a week off. The bond market was closed because of Martin Luther King Day. Hope everybody had a great 3-day weekend. I'll tell you, this weekend was one of the reasons I love Northern California. Bluebird Day, 70 degrees, shorts and t-shirt weather. Everybody was out on the trails, and it's the middle of winter. Grass growing everywhere. It's just a wonderful weekend, but don't get too comfortable. Looks like we're going to have snow next week. Okay, so what's happening in the market? We had a slight recovery last week from the previous week. We know that rates actually got worse the previous week and all the drama that we had in our capital, but they ended the week actually better, so that's a good thing. What are we looking at this week? Central banks, geopolitical, and economic news. So 7 of the G20 economies, the top economies in the world, are having their interest rate and policy decisions with their central bank. Now, with COVID ravaging the world, we really don't expect them to lower rate or to increase rates or make any changes, but we'll be watching that this week. The other thing that's happening is Janet Yellen. She isn't part of the central bank, but it is related to that. She's going to be our new secretary. She's not official yet, but they're actually in the middle of hearings today. And there's going to be a lot of questions to her about debt. And debt is important to bonds. Listen, we had debt issues before COVID hit, and now we have more debt issues. And really, historically, the best way to get out of debt for an economy is to grow your way out of debt, not to spend your way out of debt. Well, Janet has made some comments over the last few weeks that, hey, stimulus, get the stimulus out there. The rates are low. Let's just keep spending. So really interesting perspective, and we'll see how the market reacts to that. The second thing is geopolitical. Biden will be in control, and his cabinet will be in control of the White House at noon tomorrow, Wednesday. So 12:01, they're going to hit the ground running. What does this 100-day plan really look like? What are the details? There's been a lot of talk over the last week or two about a new $2 trillion, an additional $2 trillion stimulus plan. Will it get through? What does that look like? Tax changes. Is he going to be announcing any changes to the tax code coming up? And really the question is, will it get through? Even though the Democrats control the presidency and the House and the Senate, they still have to have the votes in the Senate to get anything through. So it doesn't necessarily mean a rubber stamp. The third and last thing is economic news. So I've talked about this before, but the average homeowner has 40% equity in their home right now, a significant difference compared to the housing crisis we had in 2008 through 10. And a report came out that last year, 50,000 homes were foreclosed on. A lot of homes, there's no doubt about it, in 2020. That's 1 million less than the number of homes that were foreclosed on in 2010. It's a 96% less homes were foreclosed on in 2020 than 10 years ago in 2010. Only 3/10 of the homes in a mortgage were foreclosed on. So that is a really, really good number. There's been a lot of talk about what's foreclosure rates going to look like. And right now, a lot of this has to do with people have equity in their homes and they can weather that change in the market if and when it comes. So the second thing we're looking at as far as economic news, a lot of housing data coming up this week. Not a lot that's really going to change the market. Jobless claims on Thursday. That's always something we look at. The jobless numbers have been really high over the last few weeks, and we really don't expect a great number on Thursday. So that actually could move rates lower if that is some indication that the economy is not going to recover faster than expected. So we're going to start the week floating, expect a modest week of volatility, and we're going to be watching the market toward the end of the week. So if your clients need some insight about interest rates, go ahead and give me a call. All my information is down below. If you know someone that can benefit from this video, please forward it to them. And if you have any comments about today's analysis, I'd love to hear it. Thank you. Have a productive week, and we'll talk to you next week.